when talking about reversals, there are four main components that we want to include in this topic. One being, what is a reversal? Two, why do we use reversals? Three, how do we spot a reversal? And four, how do we confirm a reversal? So to start with the first one, what is a reversal? When a trend is going in one direction and then flips on itself. So a reversal is when you have a market trending in one direction. So say your market is trending down. So you have a bullish trend, right? You're going to be constantly making lower lows and lower highs, kind of like this, right? So when determining where your reversal is going to be, you want to look at your market structure, determine what your trend is currently doing. If it is trending downwards, you're looking for a reversal to the upside, like this. If it is trending up, you're looking for a reversal to the downside, right? Okay. So in order to find your reversal when you're in the heat of a trend or trying to take a trend, we're going to use a downward trend, for example. So we're going to go back to this one. So if our market is trending down like this, we are looking for this trend to then come up, make another low, or make a lower high somewhere in here, and then come up again, break that, come down, retest a demand zone, and then go back up. Okay. So what we're looking for here is our break of structure is going to be right here. This is going to be our break of structure. This is because when this trend starts to come down and then starts to pull back up to the bullish side, we are making here another lower high, right? So these are all lower highs. So we're making another lower high, and then we come back down to make a higher low, then confirming that we are starting a new trend, right? We're going in a different direction. So when this comes down, this candle closes here and then makes an impulse move up this way and then closes up here, we now have a break of structure. It has now broke this lower high. Okay. It closed above this area right here, right? So now we are looking for this to come back down and test a demand zone, right? Okay, so when it comes back down to test a demand zone, we are going to want this. Oh, that's kind of a bad drawing. But we're going to want it to come in kind of something like this, right? It's going to look a little bit prettier on the markets, but we're going to want it to come back up, close up here, calm down, test this demand zone. This would be our buy location. So we'd have a buy order. We'd buy in here, take the trend all the way up. Okay. So let's look at that on a live chart, right? So we're going to come over in here. So this is on the Australian dollar to the US dollar on a 5-minute time frame. Okay. And to kind of further this down, you can always do top-down analysis, which will be in another video coming soon. But top-down analysis basically meaning like you're going from a week time frame, you're looking at a trend on a week, then a 4-hour, and then a 1 hour. We won't get into that yet. Everything that we are doing with these reversals is going to be interchangeable on whatever time frame you're on. So if you prefer to use a lower time frame, like your 5-minute to 1 minute, your 30-minute to 15-minute, things like that. It's all going to work. Or if you even prefer to use a 4-hour to 1-hour time frame, like what I usually do during the day, that is all going to work the same way. But when you're looking at a live chart like this, so we can see that we are kind of in a downtrend here. So we're steadily moving down. We are constantly making lower highs, lower lows, right? Then we kind of have a consolidation move. We come up, make a higher high there, but this is not confirmed yet. Low, high, low, high. So we kind of so we start off with a bearish move down. We're making lower highs, lower lows, right? Kind of have a little bit of a consolidation in here into a minor uptrend. Nothing too dramatic, right? So we really don't want to be buying in anywhere in here, because at the end of the day, you're not really going to make a whole lot off of anything in here. So if you were to come in here and declare this as a possible reversal, right? And you just took this trend all the way, you're not really going to be making a whole lot. You still will make money off of it, but it's not going to be a whole lot. You're not going to be able to be in it for a very long period of time because, as you can see, it starts to tank downwards. So this is where we would then start looking for our reversal. So we see it's already been moving in this direction. It's already moving down, right? But now we see an impulse move, okay? We start to see bigger candles, bigger wicks. Every wick tells a story. Okay, so here is the previous, or technically here would be your previous high. These two spots would be a previous high, right? This is the highest point of it. We're just going to use this part. For example, this would be the best one to use. But we're going to use this one here. This candle closer here, this wick closer, I should say. This is going to be our break of structure, right? And now we're going to want to, so that is the first 2 steps done, okay? We're using the market structure. We're identifying the previous trends. We're looking to be taking a reversal coming here soon. We come down, we follow the trends, then we spot a break of structure. Okay, now we're kind of in the, okay, possible reversal coming. Let's kind of get set up for the next move, right? The next move is going to be setting a demand zone. So our demand zone is going to be on the last candle right before our impulse move, okay? So we're going to be using this candle here. It doesn't matter if it's red, doesn't matter if it's green. It's always going to be your last candle before the impulse move. So we're going to take the top wick to the bottom wick. We're going to go over, okay? This is going to be our demand zone. That's a little messy. Oh, well, you get the point. This is our demand zone. You put it on the last wick before an impulse move after you identify your break of structure, right? So what's the next step? We want this to come down, retest our demand zone, have our buy order ready, and then ride out, right? Okay, so what's that going to be? It's going to be a long position. We want to take a long position in here. How do we set this up now? So our long position is going to be set up like this. This is typically how I set mine up. You can set yours up however you prefer. If you're a little bit more confident, be confident about it. But my take profit, I always take to the last high, okay? The last highest point that I can see in this trend here. So this is what I'm talking about. This is what I'm looking for. This is all I'm looking at right in here. I'm looking to take my take profit to this point here, this previous high. And then our stop loss is going to be just below this swing low for multiple reasons. We can always change it, but I like to be cautious because you see these giant wicks, right? If this comes down and retests in here, that's good. That's what we want. But say it comes down, it retests and it retests and it retests, and you get a wick closer right here, but then it starts to go up. If you have your stop loss set to here, what's going to happen? You're going to get kicked out of the trade, right? Now, I always set it down a little bit lower, but you'll see why here soon. We set it down here. We're going to let this play out and see where this takes us. Boom. Okay. So you see it comes in, it retests here, and then what does it do? It starts to move up. Okay. It's exactly what we wanted it to do. We wanted to come in, retest, and then move up. Okay. We're going to bring this back just a little bit here. Oh boy. There we go. We're going to bring it back to here. Okay. We are going to take our buy order. This is a really bad buy order. Ideally, you would want your buy order to be down here. You'd want this to be down here. I'm doing this on a replay chart, so it's a little bit harder to take those. But you generally want it to take in down here. Take profit all the way up. Stop loss all the way down. Okay. You see our possible profit, $2,300. You see our loss, $900. So if we lose this, not really a big deal in comparison to if we win. Now, if we win multiple of these trades, this isn't going to mean nothing, right? You're constantly in the profit, even if you take a loss. That is the beauty about these reversals. Your win rate, you don't have a very high percentage of a win rate. It's mainly going to be probably about a 40 to 50% win rate that you got, but you can see the reason. You're constantly going to have higher profits and lower losses, and that's what you want. You want to be constantly winning higher, higher, higher versus losing. If you're losing more than you're winning, you're not really doing anything. You want to be winning more than you're losing. That's the whole point of all of this, right? We're going to watch this play out, see what happens. As you can see, it's steadily moving up that way. See, there we go. And it will come down. It will play some funky times sometimes, okay? But that's part of this whole thing. The whole thing is about being confident in your trade. So doing all of these steps, identifying everything. So identifying your market structure, right? Identifying the reversal, right? It's all part of the whole thing, okay? We're going to close this out. You guys get the idea, okay? You're going to constantly be going upwards. Now, you are going to take losses. It comes with it, and you have to be willing to accept that. If you're not willing to accept to take losses, then you're probably not in the right spot to be trying to do trading, right? It's going to happen. For every $1,000 you win, you're going to lose something. It happens. But if you are following the right steps and you are taking the right precautions and factoring in your trades, or securing your trades, I should say, locking them in, you're going to be more profitable than you are on the flip side. You're not going to be losing as much. You're going to constantly be seeing an improvement in your account. And this is a really good strategy for when you buy into your first firm. You don't want to buy into your first prop firm and then blow your account within the first couple of days. That's not fun. You want to be taking the time, looking at your charts, seeing what's going on, confirming your trades, making sure everything's exactly how you want it. It doesn't always have to be, I need to buy in here, I need to buy in there, I need to sell here, sell there. It doesn't always have to be like that. You can take your time, take a deep breath, look at everything, take it all in, lock in your trade, and just let it ride out. I mean, as you can see, this was very anxiety filled, but we got there. All due to the constant double checking of everything. We're looking at our trends. We're setting our break structures. We're setting our demand zones. We're allowing the demand zones to be tested. And we're still going upwards. And now all this is also equivalent to the flip side. So if you're in a bullish trend, right? If you are going here, let's see. That's not what I wanted. So a bullish trend, right? If you are going up like this, okay, you're looking for a reversal to the downside. So what do you want to happen? You want this to come down, make a lower high, come up, come down. Now you have your break structure, right? Or technically, well, here. This would be your break of structure right in here, okay? So you want this to come up. This up here is going to be a supply zone, okay? Different than a demand zone, same concept. You want this to come up, retest in here, okay? You want it to come up, retest, and then come all the way back down. Same concept, same setup, except for you're not buying, you're selling. So you're going to have a sell order on this line here. This is going to be your sell order, okay? Your take profit is going to be down here. Your stop loss, same concept, right up here above your swing high, right? Same concept, just flip-flopped. Very, very, very simple.